Good morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. And just want to just remind anyone that needs to contact me, just send me an email and I'll respond as soon as I'm able to. And today is Friday, the 26th of November 2021. I'm just going to bring up our high-risk investment warning. I'm going to keep this on screen for a few moments. Good morning, Zinetta. Nice to have you on the webinar as always. Thank you very much for joining. And I'm going to bring up our market commentaries disclaimer here as well. And just our references, FXCM Market Scope 2.0, and I'll be also reading from the CNBC morning note. Hi, Michael, Howard, morning. Nice to have both of you on the webinar, and thank you everyone for joining. Much appreciated. All right, so just starting off with the CNBC morning note. European stocks closed higher on Thursday as investors continue to monitor political developments and the COVID crisis. The pan-European stock 600 closed up by 0.4%, with utility stocks rising 1.8% to lead the gains as most sectors and major bourses entered positive territory. Investors were digesting fresh political developments in Europe. In Germany, a new coalition government deal between the Social Democrats, Greens and Free Democrats was announced on Wednesday. The agreement will see Olaf Scholz, Germany's former finance minister, become the new chancellor, and Angela Merkel leaves the post in early December. Meanwhile, Sweden's first ever female prime minister, Social Democrat Magdalena Andersson, resigned just hours after being appointed. The move came after her budget bill failed and the Green Party quit the two-party coalition government. European investors closely monitored the acute COVID crisis in the region this week, amid rising infections that have prompted a handful of countries to introduce new COVID restrictions. Italy announced Wednesday evening that it will introduce tighter COVID measures, and Germany narrowly avoided another lockdown, with the incoming coalition reportedly wanting to wait and see if tighter COVID passport rules help to alleviate rising cases. Germany's gross domestic product grew by 1.7% quarter on quarter, which was below statistics revealed yesterday. And Germany's GfK consumer sentiment barometer showed that spiking inflation and the surge in COVID-19 cases is weighing on consumer sentiment. Overnight Asia Pacific markets shares were mixed as investors reacted to the Bank of Korea's decision to raise policy rate, and the South Korean central bank's decision followed a similar move from the Bank of New Zealand. A lot of this is a repeat of yesterday's morning notice. I think it's because of the Thanksgiving holiday. US markets were closed Thursday for Thanksgiving and will close early today in a shortened session. All right, so let's just have a quick look at the DAX over here. I want to just show you guys a few things. We'll start off with the hourly. Let's get rid of this. Okay, so there's this huge gap here. Okay, so we're going to have to talk about this. There's this huge gap here on the DAX. If you take a look at the daily, it's quite clear there. You see, yesterday was a doji, and then the open today is this huge drop from where it closed, right? So there's this big gap down there. And when we take a look at the treasury yields, I'm just going to use the US 10-year treasury yield as a proxy for general yield. You can see there's a huge move into bonds. So there's this gap down, yields are dropping. That means bond prices are gapping up. Hey, Katie, good morning to you. Nice to have you. So there's this huge now rush into bonds, into safe havens, and there's this huge drop in the risk market as seen by the DAX. And it seems to me that the COVID-19 is the culprit here. But I think it's a serious story that's developing. I just want to see how it moves, and it's really because of the COVID-19 variation that's coming out of South Africa. Hey, Adrian, morning to you, which sounds to be really serious. So I've pulled up the COVID-19 stats for South Africa, and you can see that there's this huge spike up here. Okay, this is a 7-day average, and the problem with COVID is we know that it spreads like wildfire. So although the the epicenter is South Africa, there's a huge fear of contagion. Now, this variant here is called the new variant, NU, which is the 13th letter of the Greek alphabet. So it's keeping in sort of the Greeks, right? We've got the alpha variant, the beta variant, the delta variant. Now we've got the new variant that's out, and this chart here is scary as can be. This jump up here is unprecedented. So you can see South Africa has gone through 3 waves, and they're fairly ordered, but the slopes are fairly sort of measured in the start of these waves. This is not measured. Okay, so this is hugely aggressive. There's this massive jump up here that is, to me, it seems serious. So the question is, why is this so aggressive? Why? This is clearly not following the normal pattern. In fact, not only is this a huge spike, take a look at the frequency between the waves. So the frequency there, and then the frequency is the speed, right? How frequent does it occur? So here's a fair lag, and then here's the next wave. Here's another fair lag, but it's shorter than the first lag, but not, let's say, not seriously shorter, but it is notably shorter. Well, the frequency here has declined markedly. So not only is there a huge jump in the not only is there this huge jump in terms of new cases, the frequency has caught everyone by surprise. So I know that South Africa has expected a 4th wave, but certainly not as aggressive as we are seeing, and it's just starting. So then the next question is, well, okay, we've got the frequency in. What's the amplitude? So the amplitude is your height. Your amplitude is your height. So now you can already see how this spike here, how it's about 80% of the previous amplitude, just kind of eyeballing it. So how high are we going to get with these cases, right? How high are we going to get with these cases? I already know a few people that have the new variant. So this is now a huge cause for concern, and there has been a response. A lot of so Singapore is restricting, Israel's restricting, Japan's restricting, and the travel from South Africa is now starting to be restricted in a hope that this can be sort of localized. However, okay, we all know this thing spreads like wildfire. So Katie says UK too. So I don't know about the UK cases, Katie, but I do know that the cases in Botswana, and there is I couldn't quite get to the bottom of this, but it seems that perhaps the epicenter was Botswana, but I say that as purely sort of unconfirmed. So I can't kind of see where it's. But there is a. Oh, Katie says restrictions. Yeah. So there's restrictions all over Europe now, right? But what I'm concerned about is how far this new variant effectively spreads. So, okay, so we've got in Botswana, we've got in South Africa, but we've also got it in Hong Kong. Okay, so there's definitely at least one reported case in Hong Kong, and that is because of somebody that traveled from South Africa to Hong Kong. Now, I'm not an expert in sort of the spread of disease at all, but in my mind is, okay, if some guy traveled in a plane full of other people and, you know, he's in Hong Kong, and let's just assume that a handful of those people in that plane were going to sort of stay layover in Hong Kong before taking planes to other regions. Who knows, you know, where this thing has got to, you know. So I don't quite. So I think this is a developing story. Okay. So the idea here is we've got this huge gap down here. Okay, as the story started, you know, to break. So we've got this huge gap down. What is this gap? That money shooting into bonds. Why is money shooting into bonds? Because bonds are a safe haven. That's why the yields are getting pushed down here. What's happening to equities? Okay, so there's a huge change in tone from yesterday to today. Huge change in tone. We've got this massive gap down. Okay, we've got this massive gap down. So people are jumping out of risk, going into safety. Okay, so let's just take a look at a few other instruments here. I know that this is the DAX. We'll come back to the DAX, but I want to go through to the US dollar Japanese yen. US dollar Japanese yen, because the Japanese yen is a safe haven, right? It's a safe haven. So there's a slight gap here, but the real story is just in terms of the length of the candlestick. So there's a ton of money that's been repatriated back into Japan. So the Japanese yen appreciating against the US dollar. So the Japanese yen also regarded as a safe haven currency. So you can see that there is money moving there as well. Let's just take a look at a few of the other havens. So Swiss franc comes to mind. Let's see what's happening here. It's not one that I trade all that often. In fact, I don't trade it at all. But I just wanted to see the reaction here. So you can see a whole lot of money going into the Swiss franc, also regarded as a safe haven. Okay, and let's take a look at gold as well. Okay, and money's starting to go into gold. Yeah, we'll just take a look at NASDAQ as well. Katie just asking if we can take a look, and you can see it's not quite as big a gap down, but it's been driven down. And I think that it could be a function of the lack of liquidity because of the Thanksgiving holiday, that we just don't have this huge sell down. We can take a look at oil. Oil was actually down quite severely. Oil was down quite severely. So you can already see the oil markets reacting, KD, to the sort of the fear. Okay, so you know the markets tend to ebb and flow between greed and fear. So we've definitely gone risk off. You know, gone risk off. Now let's go back to the DAX and try and keep a sort of objective as possible, which is clearly impossible because markets are pure emotion. Nevertheless, we'll just carry on using our methodology and not alter it, and see what we can come up with. So the idea here is we've had a terribly weak W-E-A-K, W-E-E-K. So we've had a weak, and you can see that we've got this huge red candle. It's the last day of trade for this week. We're still searching for the higher trough here. Okay. Now let's assume a bearish case for now. Let's assume a bearish case. How could a bearish case develop? There's two ways. So the first way would be just an absolute capitulation here, and that would take out. We take out this kind of movement would be an overshoot, in my estimate. It would be an overshoot, and I think that there would be opportunity to actually try and fade it. Why would it be an overshoot? Because would not be a defined trend. This is not a defined trend. Okay, it's just an impulse. Severe, I'm not taking away. And if we go through to the COVID original sell down, it was just a massive overshoot downwards. In hindsight, we know it's an overshoot because anybody that sort of had the strength and the gumption and the wisdom to pick up bargains over here made a killing, right? But you can see it's just one big impulse down. So that's the one sort of scenario. The scenario which I think would be much more dangerous, in my opinion, would be this type of scenario. Let's get this out of the way. Let's get this out as well. That to me would be a much more devastating chart patterns, where we would have a lower peak followed by a lower trough, because this does meet the definition of a downtrend. And it also means that as long as we have these series of lower peaks and lower troughs, then the market is really repricing. So that would be kind of in my opinion, the harshest type of price action. A shoot down like this, for me, would be an overshoot. And the markets generally have periods where they overshoot to the upside and to the downside. So that's just something that we can keep an eye for. Now, the other sort of scenario is, well, we still may have a higher trough here, and this higher trough might lead to a higher peak. Okay, so that's still very much a possibility. That's why we've got HT question mark. So let's consider those three scenarios: either a overshoot to the downside, which I think would give us opportunity, then a higher trough followed by a higher peak, which means that this sort of developing story is just your kind of a standard sort of risk off that morphs back into risk on. Or, okay, the most devastating way, in my opinion, that this could carry forward is with the lower peak, lower trough. I think that's remote. I don't think that we have a economic situation that calls for a defined downtrend. But I do acknowledge that there is a emotional fear caused by this new strain, NU strain, right, of the COVID. Now, just a little bit more research that I did with regards to COVID, this new strain. Let me just bring up the chart again here so we can see this. So I'll tell you why I think the reaction is as severe as it is, because as far as I can tell with my research, and again, you know, I want to openly admit my lack of expertise in this area, but it seems that the new variant, NU variant, okay, which is, again, just to reiterate, it's the 13th letter in the Greek alphabet, has over 50 mutations. Over 50 mutations from the, and I'm assuming it's from the Delta. So it's mutated, it's got 50 mutations and 30 changes to the spike protein, okay, which again, I don't know what that means, but it sounds awful, right? That's kind of what I've, now the issue is that the vaccines, so I've been fully vaccinated, but you know, how effective is that as these viruses mutate? And I think the big concern that is driving the fear at the moment is, well, what happens if we have a sort of a radical mutation? You know, I don't know what that's called, like sort of an outlier. What I'm saying is, all right, I would expect vaccinations deal adequately with most variations, perhaps not as well as with the sort of variation that it was developed from. But I think the big concern is what happens if there's an outlier where the mutations make the vaccinations useless. So I think that's something that might be scaring the market. Yeah, KB, send me an email. I'll show you the resources that I've looked at this morning, and I'm happy to just, so if anybody wants the resources, but you can see, so there is most certainly a fear off start to today. That's the one definite that we can say. So what we can say is that there is the one definite is that we've a risk off environment. So we're in zone 3, okay? And if we go through to our hourly, what I think we need to be cognizant of here is that the DAX is oversold. So shorting now, even though there is a risk off start to the day, has a risk associated with it. So what I'll be looking for is to see if there's any rallies, and if those rallies hold up. So you can see we've already had an S4 day. That's a huge move in terms of volatility, huge move, right? So in terms of a standard deviation, this must be like a just kind of again fun sucking, but this kind of is a third standard deviation move to the downside. It's a huge move just based on the previous ranges. So we'll just see if there is if this in of itself is an overreaction, and we'll see if there's a pullback to the S4 level, and if there is going to be a resistance factor there. So that's what I'm going to be looking at. Okay, so Shadrach says a 7.0 presenter has a new strain with mild symptoms because he's vaccinated. Yeah, so my point here, Shadrach, I feel, again, I want to profess my lack of expertise in this knowledge, right? But I would expect that the vaccinations offer protection regardless of the mutations. But I think the worry is, well, how many times does it mutate before it becomes an outlier? Does that make sense? So yeah. So I mean, I know guys that have the new variation, and they're fine, thank goodness. But I think that is a concern, and I guess we'll have to listen to sort of Pfizer's response, Moderna's response, etc. Anyways, the idea here is just be careful because we are a soldier, and I would expect that this is a huge sort of standard deviation move. I think that it's going to run into exhaustion. However, because there is a certain fear that's gripping the market, I would look at rallies and see if the resistance points hold. I'll see if the resistance points hold. All right. Any questions there? So a very different day from yesterday, a very different day that for over the last week, but it's very interesting day again, I guess, to say the least. All right. Anybody that needs to contact me, just send me an email, rshore@fxcm.com, and we'll leave it here. Just want to wish everyone well for the weekend. Chat to you guys Monday. Thanks very much, guys.